I want to introduce Edward Woodford. Edward is the founder and CEO of Zero Hash, the leading crypto and stablecoin infrastructure platform. Zero Hash's investors include Interactive Brokers, Tasty Trade, Monex, Point72, and Simplex. Edward graduated from MIT and founded his business, which is a CFTC-regulated platform. So, Edward, let's talk about crypto and kind of the growth of crypto as an asset. In the last 2 years, Bitcoin has risen from 17,000 to over 100,000. What kind of metrics do you look at in terms of understanding the breadth and overall usage of crypto?
Yeah, well, thanks for having me. I mean, obviously there's the easy one, right, which is price. And I always say that success of this space is somewhat decoupled from price. And I think that we're starting to get more metrics that we look at. So, for example, the number of Americans that hold a crypto asset now exceeds 50 million persons. This was obviously a talking point in the election. I think also another data point that we look for is which groups are actually doing anything in crypto, stablecoins, or tokenization. And that obviously includes groups now like Robinhood. And in the last few months, groups like Charles Schwab, Morgan Stanley, E-Trade have both publicly stated that they're interested in launching a product in the coming years. And so those are obviously two great data points in terms of the accessibility of this asset class to more and more retail persons.
And we talked earlier, there was a panel earlier talking about the administration. How has the administration change impacted the environment and the attitudes towards crypto as an asset class?
Yeah, so obviously crypto became one of the hot button issues in many ways. It was quite surprising to me how politicized it came. Obviously, I think the second largest fundraiser that Trump did was actually at a crypto conference. So that kind of gives you a sense of the conversation. In terms of tangibly what's changed since the election, I think there's a couple of things. So there were a couple of administrative points, some of which are quite dry, such as the Staff Accounting Bulletin, Sub 121. Sub 121 effectively impinged on the ability of platforms to launch a crypto product. Effectively, what it did is force either publicly traded company, broker-dealers, banks to recognize crypto as an asset, well, as a liability, but they couldn't also recognize it as an asset. So effectively what that meant was that people had to hold 100% cash on balance sheet. So what that meant is, for example, Interactive Brokers, their clients say had $500 million of crypto assets. Those assets were actually custodied at Zero Hash. But under this accounting bulletin, what it effectively meant is that Interactive Brokers had to hold $500 million of cash on balance sheet in order to balance the books. And so that was a very weird accounting bulletin in the way that it was done. Interestingly, and this is not a political statement, interestingly, the Government Accountability Office, a very niche office, said that it was an overreach by an agency, the SEC. And the way that it works is that you need both the House and the Senate to effectively overturn an overreach by a government agency, which is kind of an interesting way of thinking about things. There's an overreach, however, we can override it. So that was obviously one thing that's changed. There's been another accounting bulletin called Sub 122. And what this does effectively, tangibly, is that it makes it more, it lowers the cost of capital to effectively launch a crypto product. Secondly, we've obviously seen a whole swath of cases against groups, whether that be, for example, Robinhood or others, be dropped. Largely, most of these cases were predicated on what constitutes a security and what doesn't. And secondly, is a proof-of-stake asset where those assets are being staked, is there a way to offer that in a non-securitized manner? And so effectively what that's done tangibly is in the last few weeks, for example, several of our clients, such as Interactive Brokers, such as Tasty Trade, which originally had only launched 4 crypto assets, the big 4 essentially, although they're not the big 4 anymore by market cap, they've launched more assets now. So they now have over a dozen assets each in the last few weeks. And so tangibly what it's done is the SEC has effectively issued a new accounting bulletin. The SEC has also dropped a number of cases. And then obviously the background music around crypto has also shifted as well. There is a goal to be for more clarity around this space and how it's treated. And there's 2 bills right now. Effectively, there's a market structure bill And then there's obviously a stablecoin bill as well, which is obviously increasing the appetite for this asset class and infrastructure base.
And you mentioned earlier that several firms have now come out and publicly said that they are planning on expanding their crypto offerings. How have these changes impacted Zero Hash, and what are you guys seeing from a customer demand perspective? So when inbound clients are coming in, what are they asking you guys to provide and do from a crypto Rails perspective?
Yeah, so I think what it's tangibly done is that it's increased inbound. I think my view is that every single crypto platform of size will offer equities. And vice versa, every equities platform will offer crypto. This is already playing out, right? You saw, for example, Kraken buy NinjaTrader. If you look at Coinbase, they own a broker-dealer. So these two worlds are going to become one and the same. They're going to become largely indistinguishable. Some groups may start in crypto, some groups may start in equities, but the two will offer one and the same. And so I think what it's done tangibly is the questions that are being asked is, are you able to give me a competing product to Coinbase? Are you able to give me a competing product to Kraken? And the short answer is yes. So that largely comes down to, can you enable deposits and withdrawals easily? Can you offer many assets? We support over 80. Do you offer staking? Yes, we do. So it really, for us, is the breadth of assets. I think a really interesting data point, I looked at it today, was looking at our brokerage and neobank clients. We looked at, since they launched new assets, since the beginning of the year, what is the customer behavior? And what we found is that over 50% of people that are buying the new assets, so this includes, for example, Doge or Solana or Aptos, 50% of the first purchase of a new client is in these longer tail assets, which for me is a really interesting data point that people are looking for a more skewed kind of approach to their portfolio building. And that is their entryway. That entryway into crypto is no longer just Bitcoin and ETH. Their entryway is into Solana, Aptos, Doge, or so be it. And I think that's a really fascinating data point and is only driving more and more platforms looking to support more assets.
So talk about some of the difficulties customers face when they want to move assets between digital wallets, banks, brokerages, and kind of what does that customer journey look like? What did it look like 6 months ago? What does it look like now? And kind of how are things changing moving forward as more traditional brokerages want to offer access to digital assets?
Yeah. So in crypto, there's obviously no construct of an ACATS, right? So it effectively is an on-chain transaction if you wanted to enable a deposit. The focus of conversation around deposits and withdrawals are largely around source of funds. How do you know that these source of funds are coming from a good place? I think that discussion can get more nuanced. For example, some of our clients say, hey, we're comfortable with accepting a deposit from a centralized exchange such as Coinbase, but we're not comfortable receiving a deposit from a self-custodial wallet, for example. So those are the sorts of nuances and product features that we've built to enable this kind of toggle on, toggle off construct. I think the second thing is usability, the user experience. It's pretty scary for most people to move crypto on chain. And so one of the products that we're rolling out is what we call Zero Hash Auth. Think of this similar to Plaid, which effectively abstracts away the complexity of having to, for example, enter a deposit address. It abstracts away all that complexity. So effectively what it is it's logging in, authenticating through, for example, your Coinbase account, your Kraken account, your Cash App account, and authenticating a move on chain. And that, I think, is really important. Customers get confused with, for example, hey, I actually own wrapped Bitcoin, but the receiving party only receives Bitcoin. And if you think about this with stablecoins get a lot of hype, but to actually transfer a stablecoin is often incredibly complex. So USDC now is on 20 different chains. If I want to send you a stablecoin and I have to think about the chain on which I'm sending it, that to me is not a good user experience. And so this authentication method to abstract away the complexity of blockchains, assets, all those sorts of nuances, gas fees, network fees, for us, we think is a critically important piece. And then also what you can do once you have that is you can do, for example, things like fuzzy match search in terms of names. So pull in the name from Coinbase. Does this match the account of the brokerage platform? And so this is the sort of innovation that we're doing, which is not only solving a usability challenge, but also solving a compliance challenge as well.
So what would you say the most typical ask is from a client, just very simply?
Yeah, I mean, I think there's obviously the hygiene factors, so you have to be secure. For example, today we announced that we got SCI audited. We're obviously not within the purview of the SEC, but we have a lot of partners that are, and so in showing good controls and balances there, NIST compliance, SOC compliance. I think that the most common thing that we get asked right now is, how do I launch quickly? And how do I continue to scale this? Because they understand, most of our partners, whether this be a large bank with a brokerage platform or a neobank or any form of platform out there, they understand that this space does not stay still. If you look at the top 50 assets today and you compare them to a year ago, I think that there's overlap of less than 50%. And so the ability to innovate quickly is incredibly important in this space. And so most partners are saying, okay, I'll start pretty basic, but I understand that I'm going to have to innovate in order for this to be a competitive product in the long term.
As the compliance landscape becomes presumably more clear, how does compliance play into that conversation as well? So I have to assume that when clients are coming to you and saying, how can we get to market quickly, that there is an implied ask around doing this in as compliant a way as possible based on current rules and how they're being understood.
Yeah, so I think one of the fallacies in the space is that this is the Wild West. This is a space that is not licensed and regulated. In fact, the way that the current structure that operates in the United States is that this fits within money transmission laws. So effectively, we're regulated in every single state in the US, plus DC and Puerto Rico. And then different states have then introduced crypto-specific licensing. And that is largely because money transmission laws weren't really built for example, market structure, surveillance. And that is what, for example, the BIT license in New York provides. And we're a BIT licensed entity. So most of our partners are looking for what we call a fully disclosed model, where every end customer is a client of Zero Hash. We are doing the regulated activity. They do not want this to sit within their broker-dealer entity. Ultimately, these are non-securities. And equally, they don't want to go out and get 50 different money transmission state licenses. There is the potential for change over the coming 2 years. Our view is that there is a solid state structure. We should also have a solid federal structure, similar to banking, where you can go through a state-by-state structure, or you can get OCC chartered. We think that that competitive nature between state and federal is really important. Other states will continue to innovate in this space. So California will introduce an equivalency of a BIT license in 2026. They've passed the law. They're going to be rolling out in 2026. So the friction and the compliance overhead is only going one way.
Great, thank you. As we've seen an explosion in overnight trading and the demand from foreign investors to access the US market, how has that impacted the demand for stables and the ability to use crypto as an asset to basically fund a brokerage account?
Yeah, so I think crypto has always been a 24/7, 365 market. And so inherently, some of the problems and challenges of a 24/7, 365 market have been solved. There is no opportunity, for example, to reset your matching engine in these sorts of period, right? Scheduled downtime, the ability to move funds as well. So we think that stables can act as a massive benefit for traditional equities trading. And I think overnight trading is one construct where this becomes a real challenge. I think weekend trading as well. And naturally, what has followed crypto in terms of this 24/7, 365 market, it is events-based trading. So for example, Kalshi offers stablecoin funding in partnership with Zero Hash in order to be able to fund your account. So what was really interesting was the election occurred on a Tuesday. If you're onboarding tens of thousands of new clients, it's very difficult to manage fraud. And so typically what you do is you put a very low cap on. I think it was 2,500. So you're really limiting the ability for customers to fund. Secondly, if you wanted to fund right up to the election, right through to the results, and they allowed the contract to effectively settle all the way up to 99%, the only way to do that was through stables. And so what stables achieve is instant funding. It's non-reversible, which is really important for players, and it's 24/7, 365. And so the problem set of crypto have been applied to events-based trading, and that's why we service many events-based platforms, including Kalshi. I think as brokerages increasingly move towards 24/7, 365 overnight trading, stablecoins also serve a really important alternative payment method for that. I do think, though, that you don't need to wait for 24/7, 365 to embed stablecoin funding for a couple of reasons. One, it can be very low cost and very, very efficient for a funding mechanism. It's non-reversible. These are value propositions that matter regardless. And thirdly, if you're a platform that has a lot of non-US persons, it's a real benefit. So what I think people don't understand about stablecoins is that stablecoins are now accessible effectively through most people's primary accounts. Most people in this room will have an account at PayPal, Venmo, Revolut, Nubank, Cash App, Robinhood. These platforms all have stablecoin funding or will in the next quarter. And so we all have access effectively to this APM. And if you think about that outside of the US as well, that is only proliferating as well, with groups like Nubank offering stablecoins as well. And so what stablecoins can do for non-US persons to fund their trading account in the United States is really powerful. You don't need to go through multiple intermediaries, which inflate cost. You don't need to wait 3 or 4 days to settle a transaction. And so that is incredibly appealing for non-US persons as well for brokerage platforms. So I think those are the key drivers of what I would call the stablecoin account funding mechanism. Importantly, with our partners never touch the stablecoin. So we abstract away all of the complexity around, for example, I'm sending USDC on Solana. Our partners don't need to buy a small fraction of Solana to be able to accept that stablecoin. We handle all of that. So in the Kalshi use case, the clearinghouse only receives dollars. And so we abstract away all of that complexity from a compliance perspective, from a money transmission perspective, and from a technical perspective with these many, many different chains and the nuances around that.
So how is this going to impact the ability to fund accounts using stables in the TradFi landscape? We've been talking about it a lot. What do you think this looks like 12, 24 months from now? Obviously, you said earlier there's going to be a move towards more crypto players looking to compete and vice versa, TradFi players looking to compete. How important is this, do you feel, as an offering, and kind of what do you view the next 12 to 24 months looking like?
Yeah, I mean, I think every brokerage account in the United States becomes fundable through stablecoins. And I think that largely comes through groups including Zero Hash. I think if you look at the success of groups like Kalshi and others, it's been incredibly successful in terms of the percentage of funding mechanisms for clients. And so I believe that this is, again, I don't think this is like a panacea, right? I don't think every client is going to fund with stablecoins. But I think that there's certain use cases, there's certain contracts, there's certain pieces where it makes a ton of sense to offer stablecoin funding. And then when you compound that with, for example, our authentication product, you can then allay some of the concerns around source of funds. But again, source of funds in crypto and stables is really quite robust, right? So there's a couple of things. We do on-chain transaction monitoring. OFAC now provides blacklisted addresses. Travel rule, any amount above $3,000, you have to report the name of those persons funding the transactions. So this is a very robust and secure funding mechanism. And I think that as groups seek to grow, especially outside of the United States, it becomes a critical unlock. Even if it grows your business by 10 to 20% from a funding mechanism, that is really, really material.
And that's how you see this ultimately benefiting the US TradFi ecosystem.
Absolutely. And look, if you're bullish around events-based trading, that's a 24/7, 365 market. If you're bullish around that the overnight market will increase, for example, to handle Asia, you know, the payment rails need to keep up. And then that's kind of the consumer B2C market. I think if you think about, okay, let's think about collateral. How does that play out? So for example, last week, ICE announced potentially, like an MOU, something vague around leveraging stable coins and stable instruments. That I think is a critical unlock as well. Then you start to think, how do the clearinghouses think about collateral? We're sitting here today, and there's obviously been a massive market movement, and the Asia markets opened last night. The way that we do collateral right now just doesn't make much sense when you think that you can unlock value 24/7, 365. If you can unlock value 24/7, 365, the models need to change. And then also the way that we do modeling is like we accept this tail risk. With 24/7, 365 movement, you don't need to accept the tail risk. You can literally settle a transaction within seconds in order to fund that liability. And so I think in terms of the value to TradFi, I think, yes, it's growing the consumer market, giving consumers more options to fund accounts, tied to the growth of events-based trading, tied to the growth of 24/7 trading. And then you also have what I would call changing the paradigm as to how we think about collateral. And that's what I think stable coins, which are effectively tokenized dollars, and then what I call tokenized instruments, which are effectively things like BlackRock's Biddle Fund or Franklin Templeton's Benji Fund, as a collateral mechanism, a yield-bearing instrument that can be moved 24/7, 365. I think that disrupts the way that we think about cost of capital in this space.
So what does Zero Hash do in terms of tokenization, and how might this impact the global trading ecosystem moving forward?
Yeah, so I think tokenization is a buzzword, and like all technology, there's going to be areas that are really tangible and areas that are, go through a hype cycle. I mean, I think though you can't ignore the conversation. If you listen to Vlad, he's talking a lot about tokenization. If you read Larry Fink's most recent letter, he talks about every asset everywhere being tokenized. And so I think there's a huge value of tokenization in the ability to transfer mechanisms in a more, and to be able to fragment that more meaningfully. I think that's really, really interesting. Tokenization can mean tokenized stocks. It can mean tokenized, money market funds, such as, the groups that I mentioned, Biddle, Franklin Templeton, and others. And that, for me, is where the critical unlock happens today, which is effectively tokenized money market funds. The ability to have a yield-bearing instrument that can be transferred to effectively resolve the collateral call is, I think, game-changing. And I think there's going to be pushback, right? Because if a group holds your money and they're earning interest on it, there's obviously going to be these pushbacks. So I think long-term, though, the benefit is huge there. In terms of how does Zero Hash play in the tokenization space? So one, we have a state chartered trust which can hold tokenized assets. But secondly, what we do is, at the end of the day, you need to be able to move what I call between stable coins and stable instruments and dollars, right? A clearinghouse, I think, is going to take some time for a clearinghouse to actually accept a tokenized dollar. And the reason being is, I think, being very pragmatic, USDC depegged 3 years ago, right? So a tokenized dollar is not quite the same. And I think there's functional aspects of that, and then I also think that there's technical aspects of that. And so the ability to move between a tokenized instrument, right, Biddle, a tokenized coin, such as USDC, that ability is really, really important. So what Zero Hash does is we allow people to move from stable coins into stable instruments, and we do this for the largest tokenized money market funds. So if you want to go from a stable coin, such as USDC, into Biddle, you can do that through us. If you want to go from Franklin Templeton's Benji into stablecoins, you can do that through us. And that market is still relatively small, right? The total number of assets out there is $20 billion. But if you think about opening up this technology to more use cases, I think you're going to start getting loan portfolios, slightly, more liquid markets being put on chain. I think you're going to be finding more and more tokenized assets being put on chain. But this space is only going to get more fragmented, right? I think, there's many more stable coins than there were a year ago, and I think the truth is there's going to be many more stable coins. So this creates a lot of complexity as well. So this is where Zero Hash also plays. So if I have USDT and you have USDC, or you have, let's say Robinhood launches their own stable coin, we need to be interoperable, right? Like, how do these two things talk to each other? So that's one, interoperability cross asset. And then two is interoperability cross chain. So these assets are now launched on many, many different chains. And there's reasons for that, right? But the two do not talk together. And so the interoperability question around stablecoins is a big space that we play in. And it sounds simple. We convert USDC on ETH to USDT on Solana. Sounds very simple, but it's a critical function. Same thing with, let's say JP Morgan launches a coin. Is Citicoin, how's that going to interplay with Citicoin? So I think there's a lot of these fragmentation problems that are starting to come up, and Zero Hash effectively sits in the middle and can allow for any of these assets to talk to each other, whether it be a stable instrument, a coin on from one bank, or a coin on one chain versus another.
And you talked about brokerages and people who are offering access to trading. What do you think exchanges can do moving forward in terms of tokenization and excuse me, moving in that direction?
Yeah, I mean, I think right now tokenization is largely fits within the constructs of what we deem today. So I think there's going to be lots of questions around, for example, what is the role of a transfer agent when you have a public blockchain, right? So I do think that there's going to be these different discussions around, is there a potential to disintermediate? Once you have something tokenized as well, I think you can build more decentralized applications as well. But there is a reason why I'm not a true believer that decentralization is always good, right? And so there has to be a value proposition as to why something is being decentralized. Tokenization certainly allows for a decentralized mechanism. But the way that I think about tokenization is it's just a new mechanism of transferring value. And in the same way that most people in this room, some people might really understand electronification of markets. A lot of people don't, right? So when we move from paper to the floor to electronification, there was pushback, right? And people often ask me, Interactive Brokers was one of your earliest investors, and why? And frankly, I thought about the question too, and I don't know, it's not really my story to tell, but I think if you look back at the story of Thomas Petterfee, he really made a lot of money by effectively automating. In a market where it was deemed that you couldn't do electronic market making. So what he did is he created a finger that would just move much more quickly, right? And so at the time, we were against electronic market making. We now live in a world where we all understand the benefits of electronic market making. And so like any technological evolution, there's going to be pushback, and there will be constraints that people will try to put in. But the ultimate piece is, I think, that the benefits will override. And so I think tokenization is going to be a new mechanism. And we will stop talking about tokenization at some point because it is just going to be a new mechanism of transferring value more cheaply, more efficiently at all times, anywhere across the world.
Thank you. And then last question. Obviously, the markets have seen an extreme amount of volatility. And overnight sessions you mentioned earlier, 24/7 access. How do you think Bitcoin and crypto as an asset class holds up in the face of overall market volatility and an overall market sell-off?
Yeah, I mean, I think what's pretty incredible is, over the weekend or end of last week, we had the Treasury Secretary talking about Bitcoin as a store of value. There's a lot of people that have done a lot of correlation analysis between Bitcoin and gold and equities. I truly believe that it is a good long-term store of value mechanism that has a lot of benefits over gold. It doesn't necessarily mean that it is a binary distinction. Also, there are now tokenized mechanisms of transferring gold as well. And so again, these things aren't binary in terms of how we think about these things. And so I do think that it has started to attract the attention, at least the psyche, to have the Treasury Secretary of the United States talking about Bitcoin being the store of value. I think just shows how much this technology and asset class is becoming part of the common day narrative.
All right. Thank you, everybody, and thank you, Edward.
Thank you. Appreciate it.